Hi, my name is Ned Koch. This video is a video that is at the end of this post on on the Warp Investor blog. The title of the post is "The Big Difference Between Today and 1980s Valuations." The reason for this is that someone may conclude that today we're going to have some the behavior of the S&P 500 will be similar to what it happened in the 80s, which I'm going to show in a little bit, and that would be an expectation that may not be correct because of this big difference in valuations. So let me open this set of slides. So in this period, going from 78 to 87, this is more or less or approximately the period that Paul Volcker was the chair of the Federal Reserve. And as you can see, during this period, there were rate hikes. So the Fed funds rate was increased, and that led to a recession. And they were decreased to help us out of the recession, but they were increased again and then decreased and then increased again, and that led to another longer recession, the 81-82 recession. So this was the 1980 recession. This was the 81-82 recession. And as you can see, during this period of quite a lot of turmoil, uh, starting here with an increase in interest rates, the S&P 500 was relatively flat. So it was a range bound in between 100 and 150, you could say. And yes, those were the values of the S&P 500 in those days, and much lower than today. But it was this period was the S&P 500 was relatively little changed given the turmoil in the period. As you can see here, inflation was high, and that's why interest rates were increased because inflation was very high. And inflation started going down, but as you can see, this period was not one of very, inflation was still holding a little bit higher, and then interest rates were increased by Paul Volcker. Then inflation started going down, and then he reduced interest rates, assuming that inflation was going to continue going down. But then inflation picked up again, so interest rates were increased. So this was a little bit of a blink by Volcker, and it's often mentioned in discussions that this was a reduction that perhaps should not have happened. And then, so we had this, and then we had the recession, and then inflation went down. Inflation tends to go down significantly during recessions, and it went down to 2%. But once it got to about two-thirds from its peak, then the S&P 500 started picking up in terms of its value, and this is mostly due to valuations picking up for the S&P 500. So the question may be, uh, couldn't we have this situation today where the S&P 500 stays more or less flat and then picks up after we go through an economic downturn? And the big difference between what we have today and what we had in the 80s during that period up to here, up to the 81-82 recession, is that we had PEs that were fairly low. Uh, Generally speaking, below 10, whether you're considering the inflation adjusted Schiller PE 10 or the S&P 500 PE, uh, they were low, much lower than they are today. And then after the 81, 82 recession, then we started seeing multiple expansion. It picked up a bit for the S&P 500. Then it went down. So this was a bit of a scare. Now the PE10 did not go down as much. So this went down and then it picked up after 84. So here we can see in a different way. So we can see D rates, um, the valuations, the ratios today, the PE ratio and the PE10, and they are a bit above 20 and a bit above 27 today. And notice that there was a bit of a spike here. That was in the 2020 recession because um, earnings go down dramatically, so you end up having this spike, and we could have another spike from current levels. Uh, but that, of course, will be due to the fact that uh, the earnings will go down significantly, and the S&P 500 value will go down as well, but earnings will go down more, and then you're going to see this spike. So this seems to be the situation that we're in today. If these PE ratios were to go down to the levels in the 80s, we would be looking at more than half of reduction in the S&P 500 from current levels, which are not the peak. So this would be a severe um, downturn in the S&P 500. So this concludes this video that is part or will be linked to the post on the Warp Investor blog, the big difference between today and the 80s, valuations. Thank you for watching.